In 1988, I bought Coca-Cola stock. People thought I'd lost my mind. The market had just crashed. Investors were fleeing anything that looked like risk. My partners at Berkshire were politely concerned, but I wasn't buying a stock. I was buying a moment when a great business was temporarily misunderstood by a frightened market. I held that position for 36 years. Now, I'm 94 years old. I've watched the railroad era, the automobile era, the television era, the computing era, the internet era, and the mobile era all unfold from my office in Omaha. And I want to tell you something I don't say lightly. The quantum computing era just began, and the market doesn't fully understand it yet. That's the only time I've ever made real money. Right there, in that gap between what something is and what the market thinks it is. Let me tell you exactly how mispriced this sector became. In January 2025, one man, one CEO, stood at a consumer electronics show in Las Vegas and told a room full of journalists that useful quantum computers were 15 to 30 years away. The market didn't debate it. The market didn't investigate it. The market simply panicked. IonQ fell 39% in a single trading session. Rigetti dropped 45%. D-Wave lost 36%. Billions of dollars in market capitalization evaporated before the sun went down. Now, I've been watching markets for over 70 years, and I'll tell you what that kind of selling tells me. Tell me that the people doing the selling don't actually understand what they own. They bought the headline on the way up, and they sold the headline on the way down. That's not investing. That's speculation wearing investing's clothes. Here is the single most important rule I've followed my entire career. The market is a voting machine in the short run and a weighing machine in the long run. In the short run, fear wins. In the long run, value wins. And right now, there is serious compounding, irreversible value being built inside quantum computing, while most of the market is still recovering from its own panic. I want to be honest with you, the way I'd be honest with my shareholders in Omaha every year. I don't fully understand quantum mechanics. I'm not sure anyone does completely, but I don't need to understand how a printing press works to understand that the newspaper business will be valuable. I don't need to understand semiconductor physics to understand that every company on Earth will need more computing power next year than they needed this year. What I do understand is this. In the span of one single week in 2025, three things happened that markets should have celebrated and mostly ignored. Nvidia, the most important infrastructure company of the computing age, released open source software that lets quantum processors and traditional GPUs solve problems together. That is not a research announcement. That is a company protecting its future revenue by building the bridge between today's computing and tomorrow's computing. IonQ demonstrated the first ever photonic interconnect between two separate commercial quantum processors. They linked two quantum computers and made them function as one unified system. The industry had been attempting this since the 1990s. It happened last month, quietly, without the fanfare it deserved. And Rigetti made its 108-qubit processor available on Amazon Web Services, meaning any of the millions of developers and enterprises already inside the AWS ecosystem can now rent quantum computing power the same way they rent server capacity today. When I bought Burlington Northern Santa Fe Railroad in 2009, people asked me why. I said, because every time the American economy moves a product from one place to another, BNSF gets paid. The infrastructure always wins. Nvidia just became the infrastructure of the quantum era. And the three companies feeding into that infrastructure are IonQ, Rigetti, and D-Wave. Let me give you my honest assessment of each, the way I'd think about them sitting in my office with a stack of annual reports. IonQ is the strongest business of the three by every conventional measure I care about. $130 million in annual revenue, a contracted backlog of $370 million, nearly 3 times last year's revenue, $3.3 billion in cash and short-term investments on the balance sheet. Revenue growing at over 400% year over year. Now, they are not profitable, and I never like that. But when a company is this early in a market this large, I'm willing to accept losses if the balance sheet is fortress strong and the backlog is real. IonQ's backlog tells me their customers aren't experimenting. They're committing. That is the difference between a promising technology and a real business. Rigetti is the highest risk position of the three. $7 million in annual revenue. But they are the company most deeply embedded in Nvidia's quantum infrastructure stack, and their processor is already live on AWS today. They have 7 years of cash runway. I normally don't invest in companies this early. But if you believe, as I do, that Nvidia's infrastructure choices will define which quantum hardware wins, then Rigetti's partnership is worth understanding. Think of it the way I think about owning a company that supplies the only viable parts to a dominant platform. The platform's success becomes your success. D-Wave is the most commercially mature of the three and the most misunderstood. Real paying customers today: Volkswagen, Lockheed Martin, NASA, not pilots, not research grants, contracts. Full year 2025 revenue up 179% year over year, a $630 million cash position after a major acquisition, and 2 entirely different quantum architectures under one roof, which means they don't need to predict which technology wins. They're hedged inside their own business. I like businesses that are hedged inside their own business. It means management is thinking like owners, not gamblers. I've made my fortune doing one thing over and over again for 70 years. I find great businesses in the early innings of enormous markets when the crowd is confused, frightened, or simply not paying attention. Then I wait. The quantum computing market is projected to grow at 36% compounded annually for the next decade. That is faster than the AI market grew in its early years. And right now, today, the 3 companies building the hardware of that market are trading at prices still recovering from a single fearful afternoon in January. The voting machine said sell. The weighing machine says something different entirely. I don't know which of these 3 companies will be the Coca-Cola of the quantum era, so I'd own all 3. But if I had to concentrate, I'd concentrate in IonQ. The revenue is real. The backlog is real. The balance sheet is real. And the technology milestone they just achieved, linking 2 quantum processors together, is the kind of thing that only needs to happen once to change the entire investment calculus permanently. My grandfather used to say, the man who waits for perfect certainty will wait forever. The era has already started. The only question worth asking now is whether you're in it